Okay, so Bitcoin is in the green. We have a bullish confirmation. I'm going to talk more about that and then we're going to jump into Mara stock. So let's get right into the charts here. So before we actually do get started, in the Discord, someone was curious. They were asking, you know who you are, and a lot of you know, you saw the comment on there, um, about how I structure my fib levels, my extensions, my retracements, how I manage these, how I create them. So I want to go over that super quick before we jump into the actual chart and then jump into Mars stock. But just remember, guys, this example I'm going to give plus everything else we're going to talk about in this video is just what I am personally doing with my own charts. It's how I manage my charts and how I look for buying and selling opportunities. So right now, just remember everything I say is just what I'm doing. I'm not telling anyone to buy or sell. So let's go ahead and get started. I'm going to use a lot of different examples and then I'm going to use a current one and I'm going to do it in front of, I'm going to create it in front of you guys so you can kind of understand how I create these fib levels and then give you a better understanding of how I personally um, expect certain fluctuations. So, quite simple. I'm very conservative with the way I use fib tools. I want to make sure I'm using them in a way where it takes away any bias, it takes away any potential emotion, like bias nature towards one specific direction for the chart price, and then it reduces that. It basically eliminates it. So I'm purely focused on price action, and I am not focused on anything else. Trying to influence or trying to force a trade to happen in a specific way. So a lot of these kind of they're all the same. So I'm not going to go over a ton of the previous examples, but I like to use fib extensions in the bigger picture as an overall direction. So if you guys been watching since this channel started last year or even earlier this year, I used a much bigger picture. I think I opened up like the monthly chart or something like that, and I created this green fib extension. Now I'm going to show you guys how I create short-term extensions, and it's going to be the same. But basically, I'm going to show you guys right now some context. But for example, this extension right here, this blue one, which was a potential top for this overall swing. So this is more of like a medium view, not a short term or long term view. But it's simple. I'm going to click on it to highlight. But we started breaking up higher. We broke previous resistances, and it started showing signs that hey, if we're breaking previous resistances, it's creating plenty of bullish momentum to potentially start an uptrend. Um, so at that point, in order to get this area, what happened first is that you guys can remember too that fib levels, extensions, retracements, just it's a way it automatically calculates investor sentiment for you, and it shows that if there's enough volume in one specific price action, uh, if there's enough volume to to lead into a breakout, then it can extend to a specific range. So what happened was when the price started breaking up higher here, I started following it higher with a simple retracement. So a retracement on TradingView, it's just the first one right here. But basically, what I do is that in order to have corrective moves within an overall view of the price potentially going higher, that shows that. So I was following the price higher, and I kept following it with this yellow retracement. So you just grab it and you move it to wherever you want. For me, it was just following the price higher. I continue to follow the price higher until the price comes down and touches the support area. For the most part, I like to use for the retracements 0.35, zero point 0.5, and the 0.618. I believe this is just super. It gives it enough room to actually have fluctuations, and it gives it enough room to potentially capture value gaps, which can also act as support or resistance depending on which side of it you're on. But basically, we came down and we touched it, and we started breaking up higher. So the moment the price touches or breaks into, but regardless bounces off of a support retracement, and it breaks the previous swing high, then at that point I'm able to create extensions for the opportunity or the possibility of the price continuing in that direction. In this case, it's a bullish direction. So, and this is all in the 1 hour candles. That's the one I primarily use for the most part. I even use it for like super short term trading. For it just works for me. But basically, what happens here is that this area, as you can see, it's gonna be actually it's a little hard to show because it's gonna be really small. But there's 3 dots. Basically, with extensions, you have 3 points, and it creates the levels for you. I like to use the 1.618, the 1.38, and the 1.236, and the 100% extension. So with that being said, we have 3 points here. We have the swing low, we have the swing high, and then um, we come back down into the actual support, which is the retracement. So at that point, um, I can easily, because we have the breakout. The breakout is breaking over the swing high. So, and I'm going to show you guys. I'm going to do it here to show you guys. So here's the swing low. We go all the way up to the swing high, which is this one before the breakout. Okay, and then we bring it down into however low the price came down, and as you can see, it overlaps perfectly. That's exactly how I got it. So the point I'm trying to make here is that with that, like more of a medium term extension, you're capturing the low, the breakout that broke previous resistances right here, and then however low it went before it had the breakout of the swing high within the structure or the wave that broke these micro resistances, right? So basically that shows that if because we already had a higher low, so if the price is indeed going to continue in that direction, then it can potentially go as high up, realistically, where the extension is before we see volume reverse, and potentially it can form a top. As you can see, that's exactly what happened. So the reason at this time I was leaning towards the price going higher wasn't just because the price broke out. It came back down and then it had another breakout over the swing high. That's not just the reason why. The reason why is because I did the same thing in a much wider chart view with like the monthly candles, and I did the exact same thing within the overall big picture structure, and it shows that this is the area. So within these extensions, I like to use these specific fib levels as areas to start shaving off the position. But in the bigger picture, if the extension, just like I did there, is showing that the price can go anywhere from between 115 to 150K, then I am looking for fluctuations in the short term, so or actually in the medium term, that could potentially lead for higher prices. Now, every time we have a breakout, so it doesn't matter if it's in the a little bit more of a short term. So this was a breakout and it broke previous resistances, so it's a breakout. And what I'm looking for is I'm following the price higher with the retracement in order to let it come back down and see if it holds support. Confirmation is breaking the swing high from the wave that I'm keeping an eye on. We broke the swing high and we went up higher. So at that point, cool. Like we have bullish momentum. At that point, I continue to follow the price higher with this is short-term example, so it'll be following the price higher with the retracement, and what I'm looking for is for the price to come back down. As the price trends higher, I'm just letting the position ride out. So um in this case, if you guys were watching at the time, this was a short-term discounted area. Basically, it's a retracement from this bigger move up. So at that point, I'm looking to really start accumulating within that retracement. It allows for a nice healthy pullback because again, just like I explained earlier, the overall direction is higher because the big picture extension is higher. So what I'm looking for is accumulation opportunities within the retracements, letting the price run higher, just let it do its thing. And once I have, we came back down, we went higher and break over that swing high, then I created that extension right there, like I showed you guys. And at that point, what I'm doing is that as the price continues to have smaller picture swing high breakouts, I, you know, I keep following the retracement. Every time it comes back down into the retracement, I like to add, and then I'll continue to add within supportive retracements, before, as the price goes up higher into the more of the medium term extension, and that'll be an opportunity for me to start selling. So we broke up into it, we maximized it, selling opportunities, and then next thing you know, we came back down. And then at this time, simple, just like, one second, just like I got this one, which was following the price higher here. I kept, as we continue to go up higher, I kept following the price with a little bit more of like a medium term, bigger picture red retracement. And then again, well, we maxed out this area at that point. I'm waiting for a bigger picture retracement to accumulate, and I have been accumulating the BitU position I showed recently. I'll show it again tomorrow. It is slightly in the green, but I'm gonna get into that tomorrow. But then basically, I'm looking for the bigger picture retracement, to accumulate aggressively once again. It just gives me an idea of how low the price can go before bears exhaust themselves, and we can see a volume change. This example is getting really lengthy, so I'm gonna make it quick. But yeah, we came back down into this area. Now, to have a second level of confidence, I wanted to use this structure to see how low the price can potentially go. So I did this. I did it, I think, in front of you guys in a video previously. But the dots are in this level, and this level. So the idea is that, just like in the previous example, for the bullish move, for a bearish move, I use the swing high. So I'm gonna highlight it again. I'm gonna use a swing high all the way down to however low the price went before actually breaking into the overall retracement. And then, well, from there, it was quite simple. The way we close it out with the third point will be however high the price went. So it's like, we come down and we go up. We're creating a lower high, and it gives us this extension to look at, and it overlaps perfectly with the retracement. So that's how that works. And now I'm going to give you guys an example now, and then, or actually, I'm going to go over this as well. So a lot of these other ones are short term, right? So as the price continues to come down lower, I want to know how, like, if it tries to have a corrective move, I want to make sure it's not actually trying to have an early breakout and confirm another uptrend. So as the price comes down, I keep following it with this simple retracement. It's just, we start at the swing high, we keep moving it down, and then every time the price comes down and it breaks up into it, then it allows for an opportunity to sell. So I wanted it to be a little bit more safe with it. So what I did is this yellow retracement, and I talked about this previously, it's the start of a new breakout. So from here, before the price had that confirmation where it broke the previous swing high, I'm following it with this yellow retracement all the way for how high it can go. So that means that when the price eventually tops out, and it topped out very nicely in the extension, and it comes down, I'm using this as a short-term opportunity for like very short-term trades. So as it comes down, I can add within the short-term support, but knowing that the price can easily come down lower because we maxed out the extension. The price is very much over exhausted. So what happens is that I like to watch the price for it to come down into that more of a short-term retracement. Again, this is from the start or the continuation of this move. So it comes down into it, and then I use another retracement, the red one. I changed the color, but it starts at the swing high, and I keep following the price lower until I find support within a little bit of a bigger picture retracement. So eventually, when the price finds support within it, what I'm doing is like, just like right here, like I follow the price lower until it eventually bottoms out. It bottomed out within support accumulation. The moment the price starts to have that correction higher, I'm looking to sell within the retracement, or the more of the short term bearish, where we have little bullish uh, retracements higher to kind of correct it. So it's just coming down into support with a little bit of a bigger picture retracement, accumulate, follow the price lower all the way down into the retracement with a secondary retracement. So it's buying within the little bit of the bigger picture and then selling the moment the price has a correction upward into it. Because as you can see, if you were to accumulate here, for example, um, you would have had a chance to start selling within that area and you would have made a profit. And guess what? The price started going down lower. So it would have worked out perfectly. And I continue to do that multiple times. So as the price comes down, I'll keep following it with a retracement. Every time we break into it, I am creating another retracement to cancel out, the correction, and then to allow the price to continue into the trend. And remember, as the price comes down and it has these corrective moves, I don't get overhyped or like feared that I could potentially FOMO and it can go much higher, because in that case we're looking for bigger picture swing highs to be broken to have like another sign of bullish confirmation. But if the price is starting to go up higher without first breaking into the bigger picture retracement, then there's no reason to be hyped up, because guess what? Like, we came down and then right here, if you guys remember during this time, like the price started going up, everyone's FOMOing in. But guess what? If you were following the price this is how I do it. Um, I'm following the price lower. I was giving warnings and videos about the price. It can easily go up into this retracement, but it can be supportive of it and let it come down further because we are in a bearish trend at this time. So if you were keeping an eye on this area, you know that there's a potential shift in volume that can happen, and it can lead the price lower to continue filling this downtrend. So basically, in that case, I wasn't FOMO'd because, well, we're in a retracement resistance area. And guess what? It worked out exactly like that, and it broke down lower. Eventually, we finally came down into the bigger picture retracement for support. And the overlapping extension I gave as an example earlier. And then from there, we started breaking up higher. So in order to be more confident that the price can go up higher, I kept saying this in previous videos too. I'm following the price higher. So right here with this one, I'm following the price higher. And the moment the price comes down, well, I'll stop raising this. It comes down, and I'm looking for signs of volume wanting to reverse with, around this area. This is a super short-term example, so they don't hold out as perfectly. As you can see, like this one broke out of it, but it is still held. I'm not like super strict on these ones, but when it comes to like bigger picture ones like this and like this, they tend to hold the area a little bit better. But as you can see, it broke below it, but still volume kind of like was decreasing. It was getting ready to reverse to a bullish volume, and it did. And then the moment we broke, and this blue area is just another retracement. It's just another retracement. This is a swing high before the price came down and had a break of structure from the swing low. So I was using another retracement. And then I backed it up with an extension, which is basically the first move up that broke previous swing highs right here, this short-term swing high, and all the way down to where it found support. And the reason I did that is because we had a move up that broke the swing high, and it showed that there's bullish momentum forming. So it was fine for me to use this move right here. So it starts here, second dot, third dot, it gave this area, and within this area we start seeing fluctuations trying to create resistance. So now what I'm doing is simple, right? So the idea, I explained this in previous videos, I'm looking at 128K as the next leg up area before we start seeing some more like bearish volume begin. At that point, I would just follow the price higher with a retracement, and if the retracement holds, then and it has a bullish confirmation, like I explained earlier, then the next area will be 136K. But until we hit 128K and have a correction, and potentially, and we have bullish confirmation, then I'm just not worried about it too much. But yeah, within now what I'm doing, I've been with this area, I've been following the price higher until it finally breaks into it. Now, the price finally broke into it. So there's some short-term accumulation opportunity. But here's the thing: I'm gonna do some stuff here. Um, Now I'm gonna follow the price from the swing high coming down. I'm gonna change the colors so it just looks better. So this is just following the price down. If the price continues to drop lower, then I will follow it further. But basically, the idea is that this is now acting as resistance, because, well, even though we broke into support, it's still really weak. Usually, I like to see the area get filled a bit more, and the RSI is showing that it can still go down a bit more as well. But what I'm looking for, if the price were to go up higher, um, well, we're looking for potential weakness in volume within this area that could potentially lead the price lower. At that point, I'm looking for the swing low to be broken, to allow the price to fill this area a bit more. Once it fills this area a bit more, we don't want to see the price break below 115 or even 116k. But if it does, well, it's simple. If it does, I'll use this. Like, let's just say, the, so I start from here all the way down to the swing low. This would be where resistance can potentially form. And, well, let's just say it forms at 120k. Then it shows that it can have a little bit of a bigger picture 3-wave move down, and find support within this area, which will be completely fine as well, because even if it is a little bit more extreme and it comes down to around 114.5k, well, it's still above this swing high. So as long as it's or swing low, as long as it's above this swing low, then there's no reason to create an even bigger picture extension lower to potentially factor in bigger swings, right? So it's as simple as that. So now what I'm doing is that I would like to see this area filled a bit more. So if the price goes up higher, we got to see resistance within this area. If it goes lower, I'll follow it lower, and it will just keep acting as a resistance, but it will just move with the price. And then now, as of right now, though, because we don't have bearish confirmation, we have bullish confirmation. So if the price continues to hold support, actually, it can. I mean, this is good enough. The overall picture is at 128k, right? That's the view. So what I'm gonna do now is I'm gonna use an extension, and this is simple. I like to use Elliott waves. Just think about it and draw it. I usually don't like to rely on Elliott waves too much when there's a lot of macroeconomic influence. I mean, one of the things too is we have a CPI, core CPI, CPI year over year, all August 12, which is tomorrow, and it's all, I believe, an hour before market open. I bet, it's still worth using, but just understand that when there's a lot of macroeconomic, like, emotions in the market, then a lot of times, like, Elliott waves can be a little bit messy and even fibs. But they still tend to hold up really well. So we have a very clear move. So if I'm gonna create a little bit of a bigger picture, but not mass, this is the biggest picture, like a big picture, 128k next. But I want to create like a medium sized picture, sort of like a bigger picture move to see how likely this area can look for our target. Because even though we have a target here, we want to have um a second layer of confidence with it, right? So let's see. Here's the swing low from the bearish move down. This is where it bottomed out, and then we went up higher and we broke this swing high. So we have definitely a lot of bullish momentum. Even though the price can come down a little bit lower, as you can see, we can still fill this area a bit more. So there's no reason to get ahead of ourselves when it comes to being optimistic in the very short term. So what I'm gonna do right now is I'm just gonna factor in this swing low. I'm gonna move it here so it looks better on the chart when it's done. So this is a swing low I'm gonna factor in. I'm not gonna factor in this one because, well, this is an early indication, an early sign to potentially get a higher low. What I want to see is the breakout confirming that some bullish momentum it's building. So I'm gonna use this swing high right here, because this swing high um was strong enough where the price came down and used the resistance as a support and broke up higher. But that doesn't really matter too much. What matters is that the price ended up breaking this swing high and creating. This is where the bullish confirmation really happened. So what I'm gonna do is, and it's quite simple. Um, the price from the low to um, early indications of bullish confirmation. So this will be the third wave. You have like a first, second, third wave, um, and then we close it down however low it went after that, and it shows this area. So it shows this is well below this one. So what happens is that the price already hit it. As you can see, the price went into this area, but it can fill it a bit more. There's still opportunity. So that's why I'm keeping an eye on support. Keeping an eye on a short-term resistance, because if the price starts to pump up higher, this shows us it reminds us to be realistic, and then from there we can potentially fill this area a bit more, and then this will be the more significant support if we can fill this a bit more, and then from there the breakout can potentially maximize this area a bit more. Once it maximizes this area, again, I just you can have you can continue to use this higher, or you can use because this is a breakout from this swing high right here. It will maximize this area a bit more. You can create a new retracement if you want to be like a lot more conservative with it. And however high the price goes, let's just say 124.5. Then at that point, the idea would be like we find support somewhere here. I mean, we can either do this and come down, or we can just break up higher. But the idea is that we go up to like 124.5K, for example, and then we start seeing the volume weaken and we come down. And then we can potentially find support here. I am more confident though, for like swing trades, because that's better for day trading because it's real short term. But I will personally rely more on a bigger picture retracement in this case. So I'll follow the price all the way up to 124.5, and the move down should not break below this area. Any dip within this area, if the estimate is valid at 124.5, then the idea is to accumulate here, with the idea that we could potentially have a higher a higher high forming, right? So that's the idea. So we're in support, but it can fill a bit more, ideally. So that's what I'm looking for. And then this just reminds me that any move higher may struggle to break over this area, and instead the price can come down. It's as simple as that. So technically we hit resistance pretty well. It's good enough, but it can fill a bit more. So hopefully that made sense. And well, just keep in mind there's a lot of like CPI and all that stuff going on. We're gonna jump into Mara. I feel like I talked about Bitcoin enough. Nothing has changed on Mara, guys. Like nothing has changed. I'm gonna remove this because I think I was using that as an example in a previous video. I forgot to remove it. But yeah, Mara has been confirming like a really nice uptrend recently. We have a really good bullish momentum because again, all these areas are the same. We have an extension from a previous move down. We filled it. We went up higher. As we're going up higher, we're following the price with this retracement. The price shouldn't break below this if we have bullish confirmation. If it to hold valid. So as you can see, it held very nicely and went up higher. We're using the value gap as a take profit moment. We took profit. Value gaps we act very similar in my opinion sometimes to retracements. So in this case, the price started weakening and we came down. So at this time, simple, right? I was using the swing low, following it up with a retracement all the way up to the swing high, and then next thing you know, the price comes down, breaks into this area, eventually has a second test, but it never broke below the 0.618 at 12.64. So it held, and then the breakout, once we had a breakout, so we break over the actual swing high right here, I gave you guys this tool, this blue one, which is a extension, first point here, second point all the way up to the high, and third point down to the low. Reason is because we broke out of these resistances. So that tells me that you can draw this early, but until we have that breakout, it doesn't really indicate too much. But as you can see, it filled it very nicely. Now what I've been doing is this red one is the same thing, right? I like to be more conservative with it. So instead of starting from here and going up to here, as you can see, it would have failed. I've had this drawn before we even came down into this area. I started from the swing low all the way up to the swing high right here. And we came all the way down into it. Now we're holding it a bit. This is a good accumulation with the opportunity of the price going up all the way up to this area. So this one, again, I'm conservative with it. So I'm using bigger picture structures. It works for me. So swing low all the way up to this swing high. And then all the way down to this one. Again, the reason I'm using these ones is because, well, this pump ended up overlapping very nicely with this area, indicating that there is enough bullish momentum to potentially bring the price up into this area. If I were to do it like this, where we go from the swing low to the overall swing high, and we bring it down to this one, well, it's just like way too high. It's not super reliable just because, well, we know that in the bigger picture, if you guys go to like the monthly or even the yearly chart on Mara, it does have an overall bigger picture downtrend. So being for this next pump, being that high up isn't super realistic. So I'm keeping it realistic by just using this swing high and closing it with this swing low. The price had enough momentum to reach it, so I know that there's could potentially be enough momentum in the background to actually maximize this area a bit more. So it makes a lot more sense, right? You don't want to be overly optimistic. You want to be conservative with it and what makes sense. Also, this area is a bit more, it does a little bit more teamwork with this ascending resistance. So there's way more layers supporting this one than the more extreme one up there. So that's why I've been using this one like in the last handful of videos. So yeah, it's as simple as that. If things hold valid, this will continue to be a accumulation area with the opportunity of selling within the blue. An alternative scenario is just keeping in mind that, well, uptrends don't have to last forever. But I mean, we have macro stuff like rate cuts potentially happening soon and all that. So it's like, I don't know. I think there's I think it's fair to be a little bit optimistic with expecting this uptrend to continue higher. But let's just say, right, here's the yellow retracement. It's from the move here all the way to move down. If this retracement holds, well, I mean, I'll follow the price higher with another retracement. So it will look something like this. So like, it goes up higher. We follow it. Let's just say the price goes up to like 18.5. Then what I'm looking for is this, where the price goes up to like around 18.5. And then let's just say it tops out on that area. Then we come down. We've been following the price with the blue retracement there. So we want that area to hold. And then eventually, once we have that breakout from this swing high, then I'll be able to back up this area with a second layer of confidence by using the low up to an estimate of how high it can go, and then closing it down to wherever it found support. And as you can see, it shows that the price can potentially have enough investor sentiment factored into it to come into this area. But I'm going to delete it because we don't have that price action yet. But let's just say support doesn't hold and we actually break below this swing low. Well, that's fine because this is still the accumulation area, still support. If it breaks below 14.3, then what I'm looking for is like this right here, where we use a fib extension. So the swing high down to this swing low right here. And then let's say the price came up to 18.5 basically. At that point, let's just say it comes down and it breaks below our lowest support line. Then that's when I would draw this area with that estimate right there. It's going to look very different depending where it tops out. And then it breaks out of the support structure. Then what I'm looking for is it will invalidate this area. And instead, I'm looking for prices to potentially extend lower into this area. And when it does, and if it finds support, well, we'll just we'll follow the price lower. Let's just say find support at $9. Then the idea will be something like this, where like it comes down, finds support, it goes up, and since because we broke support right here, then well, it's a potential that there's a downtrend forming. At that point, what we're looking for is accumulation, take profits, because until we have bullish confirmation, the price can continue to go down lower. So it's as simple as that. It's using retracements and fibs in a conservative way, depending on your trading style and your risk tolerance. But yeah, basically, but with the information we have so far, we're in an accumulation support opportunity, with the idea of the price going up to this area. But again, we have some short-term resistance to keep an eye on, and then once we do go into this area, then we'll have a second layer of support to see if we can get bullish confirmation or not. So hopefully this video made sense, guys. That's basically how I do things, and yeah, I'll catch you guys in the next one.